Good day, investors. In this video, we're taking a closer look at Bloom Energy following its Q1 earnings release. And this was a massive quarter. Revenue more than doubled, profitability surged, and full-year guidance was raised significantly. So in this video, we'll break down the key results, what's driving the growth, take a look at the fundamentals, and then go through the valuation. And finally, I'll give you my personal take on whether Bloom Energy is still an attractive investment opportunity after these earnings. But before we begin, don't forget to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. Thank you very much. Now let's get straight into the numbers, and this is where things get very interesting. Bloom Energy reported revenue of $751 million, compared to just $326 million last year. That's over 130% year-over-year growth, which is extremely strong. Now moving to profitability, gross margin came in at 31.5%, up from 28.7% last year. So not only is the company growing very fast, it's also becoming more efficient at the same time. But the real highlight of this quarter is operating income. Bloom generated $129.7 million in operating income, compared to just $13.2 million last year. That's roughly a 10 times increase. And it gets even better. Adjusted EBITDA came in at $143 million, up from just $25 million last year. And finally, EPS came in at 44 cents, compared to just 3 cents last year. That's a massive increase in earnings power. So when you step back and look at this quarter, this wasn't just strong growth, this was a full profitability breakout. And when we take a closer look at their revenue growth, revenue was around $2 billion in 2025 and is expected to reach roughly $3.4 to $3.8 billion in 2026. That's around 80% growth, and at the same time, gross margins are expanding from around 30% to roughly 34%. So Bloom Energy is clearly transitioning into a high-growth, high-margin business, which is exactly what you want to see as an investor. And we can also clearly see that operating leverage is improving. Operating expenses as a percentage of revenue are declining, from around 26% a few years ago to roughly 19% in 2025, and expected to drop further to around 15% in 2026. So costs are becoming a smaller part of the business, and as a result, operating income is scaling very quickly, from about $221 million in 2025 to an expected $600 to $750 million in 2026. That's a massive increase in profitability, and this is exactly how revenue growth translates into exponential profit growth. And we're also seeing that translate directly into cash generation. Adjusted EBITDA has been growing steadily, reaching about $272 million in 2025. And expected to increase to roughly $650 to $800 million in 2026. At the same time, cash flow from operations has also improved significantly, moving from negative levels to about $114 million in 2025, and expected to exceed $200 million in 2026. So not only is the company growing and becoming more profitable, but more importantly, that growth is now translating into real cash generation. But the real question now is, what does management expect going forward? And this is where things get really interesting. The company is now guiding for revenue of $3.4 to $3.8 billion in 2026. That's around 80% year-over-year growth, which is extremely strong. At the same time, gross margins are expected to reach around 34%. So not only is the company growing fast, it's also becoming more profitable. Now looking at operating income, Bloom is guiding for $600 to $750 million. That's more than a 3 times increase. And finally, EPS is expected to come in between $1.85 and $2.25, which is roughly 2.7 times growth. So when you put all of this together, management is clearly expecting strong growth, expanding margins, and rapidly increasing profitability going forward. So management is clearly expecting very strong growth going forward. But to really understand the bigger picture here, let's take a step back and look at Bloom Energy as a business. and what's actually driving this growth. The company already has a global footprint, with operations and customers across the US, Europe, and Asia. Now looking at some key stats, Bloom has a backlog of roughly $20 billion, which gives strong visibility into future revenue. They've also announced around 2 gigawatts of capacity, showing they are scaling to meet demand. At the same time, customer satisfaction is around 86%, and they've invested over $1.2 billion in R&D, with more than 600 patents, highlighting their technological edge. So when you combine all of this, you're looking at a company with strong demand, global scale, and a solid competitive position. So the business itself looks very strong. But now let's take a look at the stock and how analysts are viewing it. Currently, according to data from Stock Analysis, analysts have a consensus rating of buy. However, the average price target is around $143, which actually implies about a 36% downside from current levels. Now looking at the range, the lowest target is $24, while the highest is $251. So there's a very wide range of expectations. And what this tells us is that, while analysts generally like the business, there's still a lot of uncertainty when it comes to the valuation and future growth. So we've looked at the business, and we've looked at what analysts are expecting. But now let's take a look at the stock itself and how it has actually been performing. Bloom Energy is currently trading at around $226 per share, giving it a market cap of roughly $64 billion. And if we look at the chart, the stock has had a massive run over the past year, up over 1,000%, which is an incredible move. At the same time, the stock is trading close to its 52-week high, indicating strong momentum right now. So while the business momentum is clearly very strong, the stock itself has already priced in a lot of that growth. So when we bring everything together, Bloom Energy just delivered an exceptional quarter. Revenue growth was explosive, margins are expanding, and profitability is scaling very quickly, all supported by strong demand and clear operating leverage. But the bigger story here is really about AI infrastructure. Bloom could benefit massively from the AI data center build-out, especially because its power systems align very well with next-generation infrastructure and potentially even the needs of companies like NVIDIA. We're already seeing early signs of adoption. Oracle has made a major investment and is acting as a first mover, while other hyperscalers may be watching closely. And if these early deployments are successful, that could open the door for much wider adoption. At the same time, the company is guiding for very strong growth going into 2026, and we're now starting to see that translate into real cash generation. So in my opinion, AI power demand could be massive, and if Bloom successfully scales capacity and adoption, this could become a very large earnings story over time. Bloom Energy is clearly a high-quality, high-growth company, but from here, it becomes all about execution. So overall, Bloom Energy looks like a long-term AI infrastructure bet rather than a short-term trade. And in my opinion, the stock could still offer significant upside if the AI-driven demand story fully plays out and adoption scales across hyperscalers. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching, and happy investing.